That's really crazy. Michael Saylor was asked in a recent interview if the Bitcoin price is currently being manipulated and if Wall Street is up to no good here in the current situation. The answer he gives will really shock you because he also talks about whether Bitcoin is now potentially facing a significant major correction or even a dramatic crash, a financial market event. He states very clearly what his current position is and whether Bitcoin will now go down massively. I have never seen such a clear answer to this question. Is your Bitcoin being manipulated, and are we now seeing a crash coming our way? I'm going to show you the whole clip now, and I'll give you my assessment afterward. The whole thing is AI translated into German and really worth watching.
Let's shift gears a bit and actually take a step back. I don't want to call it an existential threat, but let's talk about Wall Street getting involved in Bitcoin and crypto. And here's the thing, Mikkel, don't even try to deny it. Wall Street is known for manipulating markets. When they get long, they get loud. If they want a better price, they start spreading uncertainty. Now that Wall Street is getting involved and more people are jumping in, do you think the price of Bitcoin is being manipulated by big Wall Street players?
When the price changes on weekends and moves the wrong way, it suggests something's off. There's a big investor panicking or a big investor with a different plan, causing volatility. It's not just Wall Street. I think there's someone with a lot of capital who is either panicking and doing something I consider foolish or reckless. Or I think there's someone with a lot of capital who has a different agenda than all of us, and we just don't get it, and that creates volatility. I don't think it's just Wall Street. I mean, the truth is, Bitcoin is just a free market. It's the freest market for capital in the world. And the definition of a free market is that anyone can manipulate it in any way they want until they run out of money. So if you have $100 billion in Bitcoin, and you want to sell all that Bitcoin down to a cent on Saturday night, maybe you can do it, and maybe you have an agenda for doing it. I'll probably buy it if it drops to a cent, maybe if it gets down to $1. I mean, if you want to call it manipulation, you can do that, but I wouldn't really frame it as manipulation. I'd rather call it enabling. It allows you to do it, right? Bitcoin is volatile. It will always be more volatile than the S&P 500, and the volatility of Bitcoin is at 60. It's always more volatile. But the reason it's more volatile is that if you had $1 billion and you were in Japan on a Saturday night and just had a panic attack, deciding that the world is about to go into chaos, and if you wanted to take a short position of $10 billion or $100 billion on the economy, Bitcoin would be the only way you could do that. But Bitcoin wouldn't just give you the chance to short the market. It would let you short the market in a minute. It would give you the chance to short the market with 100 times leverage or 50 times leverage or 20 times leverage. Okay, the truth is, on Wall Street, you usually can't short more than 2x. So it's really tough for people to get extreme leverage. I guess in the CMA market, they'll get a bit more leverage in the future, so they can use more leverage there. But I mean, Bitcoin really offers everyone in the world the highest degree of liquidity, leverage, and credit. And maybe you're a fool if you want to short it, but maybe you're also a fool if you go the other way. But the point is, that's what makes markets. Everyone has their opinion, and you might think you know better. But what if someone wants to panic? Selling $1 billion in Bitcoin on a Saturday night because they heard rockets were launched, just because they saw it on some dumb troll account. Your position is either you're not allowed to do it, I'm going to censor the transaction because you're just not allowed in 2001, I'm the God King of the capital markets. Or your position is that you're free to do whatever you want. I think that's pretty dumb of you. There's a saying, a fool and his money are soon parted. If you're dumb enough to sell $1 billion based on a troll account just because you saw a meme and there was no rocket attack, or maybe there was one, but it didn't matter, you're just going to lose the money. You're not going to have the money, and that's how the market gets smarter. And what I would say about all this volatility and all this trading is that the really smart capitalists who make the right deals are getting richer, more powerful, and more influential, while the really dumb capitalists who make the wrong deals are getting poorer and losing power, right? And they will become irrelevant. And the market is way more complicated than you, me, any regulator, or anyone else in the whole world. And the true beauty, the crazy beauty of the Bitcoin network is that it's the largest free market in the world. Maybe the biggest free market for anything. I wonder, is there any product in the world that's traded globally 24/7, 365 days a year and more? Billion-dollar components where everything is constantly connected to everything else. I don't know, you can't short sell Manhattan real estate, you can't short gold, you can't trade iPhones. You can't panic sell a billion iPhones on a Saturday night just because you think Apple is going bankrupt. And you can't just buy 10 million iPhones on a Sunday morning like Roaring Kitty did. And I don't know if there's another free market to buy and sell things with or without leverage at any time, anywhere. That's bigger than Bitcoin. So I think Wall Street is just one of the players. But when they do stupid things like, for example, manipulate, you see, the thing is you can manipulate the price of a stock at 4 p.m. in the evening and knowing that no one will touch it until the next day at the same time. 2001. You really can't do that with Bitcoin because if you manipulate the price of the stock at 4 p.m., it will continue trading for another 6 hours. So if you've manipulated it down, you'd be the loser because people would buy it up cheap, in Japan, China, and Europe while you're sleeping. And then you'd wake up and find out that you're left holding the bag, short sold, and lost your shirt. So I think this is a game for adults. And then you'll wake up and realize that you're naked, short sold, and lost your shirt. So I think this is a game for adults. 2001. And, maybe they short sell it and then buy it back. And maybe you don't like that. They short sold $1 billion in the morning and bought back $1 billion in the afternoon. But a free market person would say, hey, they created liquidity. And because they have created liquidity, it is trading 10 times more than it otherwise would. And because it's traded 10 times more, that means you can actually pull out $1 billion in 5 minutes instead of $1 billion in 5 months, right? Have you ever seen a spinning top? I really let the top spin fast, and you think, wait a minute, it's not going anywhere. What's the point of spinning a top really fast if it's not going anywhere? Because the answer is stability, right? It creates enormous stability. We use it in inertial navigation systems. Capitalists trading with different agendas. They create stability, and these systems have physical value. They're capitalists trading with an agenda that's different from yours or mine, based on their local knowledge. And they create liquidity. They narrow the spread. They create credit. They create stability. And they actually reduce volatility because they'll short sell at the top and cover their shorts at the bottom. They create a stable framework. And the inertial navigation systems are important, the gyros are important, or all these things have a physical value, right? In the economy. And I think anyone who's in business or who's studied life a lot, they realize that in a city or an economy where there are a lot of actors able to go about their business, doing things that you don't understand, that you wouldn't normally do, that maximize productivity and the quality of life. And if we just agree to do the things that you think make sense, then any idea you've never thought of will never occur to you. And the truth is, you'd probably be dead. Because there are probably things happening in this society that you can't do, things you wouldn't even think to start that one day could save your life. And I just think, let the free markets do their job. That's what they're meant for. That's what makes the whole world work. That's what lifts humanity out of the dirt. The work of the world, that's what lifts humanity out of the dirt.
I'm really always fascinated by Michael Saylor and his analytical skills, and the way he breaks down Bitcoin so simply. And the crazy thing about Bitcoin is, yeah, on one hand, you can say that Bitcoin is crashing, that it's being manipulated, but on the other hand, you can also say that Bitcoin is just the freest market there is, just like you guys are saying here. And in a free market, it's totally normal for us to see corrections. The thing is, we've completely forgotten that markets crash, we've forgotten that companies go bankrupt, we've forgotten that anything that's not efficient just disappears from the market. And in a free market, it's totally normal for us to see corrections. The thing is, we've completely forgotten that markets crash, we've forgotten that companies go bankrupt, we've forgotten that anything that's not efficient just disappears from the market. That's what ultimately defines a free market. So if something is inefficient, it just goes bankrupt, the whole thing crashes, and it's out of the picture. But it's like this, we can just print new money, we can keep inefficient companies, we can print new money to bail out banks that have made bad bets, we can create bailout packages, unfair because the taxpayer and the saver pay for it, as inflation, as tax money to bail out insolvent banks that are unprofitable, to hand out rescue packages. And that's not the case with Bitcoin. If some Bitcoin trader or a hedge fund gets burned, or if you gamble with Bitcoin, there won't be a bailout package because you can't just print more Bitcoin. Not possible. And that's why the crashes in Bitcoin and the volatility are what they are, and also seen as manipulation, like downward spirals, price cascades when there are short squeezes or long squeezes or whatever. Seen as manipulation can also just be viewed as a normal market correction. And that is ultimately not the case with Bitcoin. If any Bitcoin trader gets burned, or a hedge fund, or if you gamble with Bitcoin, there won't be a bailout package. Because you can't just print more Bitcoin. That's not possible. That's why the crashes in Bitcoin and the volatility are what they are, seen as manipulation, like these downward spirals, these price cascades, when there are short squeezes or long squeezes. What many people see as manipulation is a normal market correction. If the market is over-leveraged, long or short positions liquidate, it might spike 10%, but that's healthy as it removes leverage. That's a healthy correction, and Bitcoin has no bailouts or circuit breakers. Some exchanges like Coinbase or Robinhood might halt sales, claiming overload, but whether it helps is debatable. If the market is over-leveraged, all the long positions get liquidated, and it might spike 10% briefly, but that's healthy as it removes leverage. This correction is healthy. Bitcoin has no bailouts or circuit breakers to stop trading. This might occur at exchanges like Coinbase or Robinhood, claiming overload. They might aim to protect investors, but its effectiveness is questionable. Michael Saylor says manipulation is limited with Bitcoin. Perceived manipulation is just market mechanisms. Sure, that might potentially happen at one exchange or another. There have been suspicions about Coinbase during particularly turbulent times, or at other exchanges like Robinhood where they said, "Sorry, we're overloaded, the service is unavailable." But maybe they just wanted to protect investors by halting sales or something, but whether that actually helps or not, that's the next question, for example. But according to Michael Saylor, the possibility for conscious manipulation is definitely limited with Bitcoin, and everything people perceive as manipulation isn't really manipulation at all. It's just market mechanisms at work. We've gotten used to regulating more and more regulations, even more rules. But really, the healing would come if we suddenly find out, hey, the market regulates itself. Maybe we intervene a little, if at all, probably not at all, and that's probably better. So in an emergency, just don't intervene. How to intervene? Right now, it's like this. The people, the politicians, or whoever, the regulators, they're just busy all day trying to come up with even more absurd things. Now, I've also seen that in the EU, they're planning to ban cotton, or who knows what else is coming. It's nice to hear voices saying, no, let it crash, let it be volatile. The risk is on investors. If Bitcoin crashes, that's their risk. We don't need to regulate that. It's also, I would say, the risk for investors. If they simply invest in Bitcoin and then the thing crashes by 50%, that's the risk. We don't need to intervene and regulate it now, it's all fine. And it's really admirable that we still hear voices like that in today's world, where there's more and more focus on regulation. And if you want to buy Bitcoin now, I'll put a link to 21 Bitcoin down below. The easiest way to buy Bitcoin here in Europe. Super easy, simple, for beginners as well as for advanced users. I absolutely recommend it. Here, you can also get up to 20% off the fees when buying Bitcoin with the code BitcoinHotel. Let me know what you think about Michael Saylor's statements here. Until then, peace out. Usend.